Good morning, everybody. Welcome back. Today is Thursday, March 30th. SPY's up another 0.5% today at 404.20 right now. After this morning's GDP report confirmed that we are not in a recession yet. So if we go over to the economic calendar. Well, there we go. GDP ended up coming in at positive 2.6% versus 2.7% expected, so slightly lower reading, which would be disinflationary. And let's see what else. We had the initial jobless claims coming in slightly higher than expected at 198 versus 196 expected, and up from 191 in the continuing jobless claims, with the total number of unemployment came in, let's see. Where is the continuing jobless claims at the top? 1689 versus 1697 last week. So actually a drop from last week. Slight increase from last week and then a slight miss on the forecast. But yeah, SPY is trading at 404. We're getting to the top of this week's risk range, which looks to be 405. We've had two gap ups in a row at this point. Yesterday we gapped up, 396 to 400. And then today we're gapping up 401.35 to 404. So two gap ups in a row, leaving a lot of room to the downside if there's any sort of bad data or any kind of thing that goes wrong that could end up capitulating the market pretty quickly. But right now we're definitely looking bullish. We're above 50 on the RSI, even for the daily chart. The MACD is starting to strengthen up, but not above zero yet. And we're about to open in 1 minute. Let's see what else is going on. The VIX is actually slightly up from its lows. It was down to 1885, but now it's at 19. Dollar index is headed lower at 102. We've been seeing a lot of news of deals being done using the yuan, or the Chinese currency. It was France that was doing it. I think Brazil had a deal using those two currencies, the Brazilian currency and the yuan. So we're seeing a switch away from the petrodollar, which is not faring well for Dixie right now. Oil, on the other hand, is trading at 73 a barrel. Whenever the dollar goes down, usually oil goes up. So this would be another sign that we're not in a recession yet. Whenever oil is going up, that usually means that there's either the same amount of demand, the dollar is coming down, or there's higher demand for oil. And then the 10-year is currently at 3.58, so kind of just unchanged for the last few trading days on the 10-year yield. Good morning. All right. SPY is starting the day at 403.95. And this rally is really, really popping on the hourly chart. 80 on the RSI for the hourly chart. All signs are pointing up for right now. I wonder if we will fill the gap down to 401.30 or not. Let's see, we're at 403.90, so that's $2.60 away. Depending on how much credit I can get, I might end up doing a put credit spread. It's only paying 11 cents, so not really worth it in terms of risk reward. I would probably take the other side of that trade, but that would mean that I would need to pull back to 400 for that to be in the money. So that would be a pretty far stretch from 404 right now. We haven't really seen any major drops in the market ever since March 23rd, about 7 days ago. And then the day before that on the 22nd. And those were, let's see, this one you dropped $3.99 all the way down to $3.91, so 8-point drop. The one before that was 402 to 392, but that was the Fed meeting. Obviously, a lot more volatility there than what you'll probably get out of a GDP report, in my guess. Hi, Al-Qaeda. U.S. GDP slows in quarter four. Markets heat up as the jobless claims comes in higher than expected. So that's leading the markets to think that the Fed could end up cutting rates sooner. Let's check the FOMC countdown tool. See where we stand in terms of rate cuts by the end of the year. Again, the Fed has said that they're not going to do any rate cuts by the end of the year. But the markets are disagreeing, expecting 50 basis points worth of rate cuts from where we're standing now at 4.75 to 5% for the federal funds rate. And we're expected to come down to 4.25 to 4.5% by the end of the year in December 2023. For the next meeting, there's a 50-50 chance between pausing and raising rates. And yesterday, this was a 40% chance that we would end up raising rates. So this has actually gone up. So you should see yields coming up today. The 10-year is at 3.58. Let's see what the 2-year yield is at. The 2-year is well above 4 now. 4.15. And the spread between them is currently negative 0.58. So this is a nice improvement from before. I don't know why I'm getting all these pop-ups. But before this was negative 0.49. And it had gone all the way up to negative 0.35 at one point. So it's good to be seeing a pullback in the inversion of the 210 spread, because once that starts rising and going positive, that's when you get the recession. Bought some puts for QQQ for April 3rd. Might be a good idea. I would definitely give it some more time until expiration, just because this rally just seems to keep on going. We're trading at 403.79, so we're seeing a small pullback from the 404 level, but nothing significant as of yet. If you do a 405, 406 call credit spread right now, that's paying $26, which is pretty good. If you set the expiration to tomorrow, you get paid 36 cents instead of 25. Again, this is the risk range that's expected for this week, so I think that this trade has a good chance of working out. We haven't had any sort of, major improvements for the market that would lead me to believe that we would go outside of our expected move to the upside. So 405, 406 call credit spread at 37 cents seems pretty appealing to me. It's dropping on me. The bid is dropping pretty quickly. All right. I want to do it at 36 cents. Nothing less. I don't want to end up chasing it down and getting a poor credit. All right. I did get filled on that. 36 cents. All right. New options alert. That would be a swing trade probably, depending on how quickly we move down. Just opened a new SPY call credit spread expiring tomorrow, which is the 31st, and I got them at 36 each. 305. I cannot type. Damn. 306. Or sorry, 405, 406. Okay. Yeah, so we're pulling back down to 403.70 right now. VIX really hasn't changed even with that 50-cent drop. Probably not going to expect it to change much until something probably blows up. Then the VIX would probably see the same kind of thing that we saw a couple weeks ago with going from the level it's at right now, basically, back up to like 28.30 again. The VIX just tends to trade around 25 for the most part. It's a mean reverting, and the average over the last year, let's see, has been, last I checked, it was like 25.50 or something like that. $252. There's 252 trading days in a year. That's why I'm typing 252. And it's been 24.46 for the past year. So a rise above 24.46 wouldn't be too shocking. RIP my portfolio. What's the relationship between the 10-year TNX and SPY? Usually, whenever the fear is inflation and rates are going up, that weighs negatively on SPY. But on the other side of the coin, if the fear is recession and rates are going up, then usually stocks will go up with that. So it's kind of double-sided, and you have to determine what is the sentiment in the market right now. Or is the market worried about inflation, or is the market worried about recession? And that kind of, flips day to day too sometimes. I think it's very, very binary. But that is usually how it goes. So if the markets are fearing more inflation to come and the rates are going up, markets would pull back. But right now, 10-year and the SPY are going up at the same time. So probably getting more recession vibes than you're getting inflation right now. And that's also, based on the fear that we're experiencing in the banking sector with all the small banks that ended up going belly up. But we haven't had any new banks blowing up recently, so that's probably why you're getting some optimism in the market. IWM is currently in the lead, up 0.83% or 0.85% right now. From 175.47 at close yesterday to currently 176.93. So this is your risk on indicator basically. And the markets are definitely feeling risk on today with this one being in the lead. But you do have some resistance that is pulling up on at 177, the obvious $180 level. So be cautious here with IWM, I would say. If IWM can't manage to break this resistance that it's had for the past, let's see, since March 14th, 2 weeks, then we could see a decent pullback for it. What do I think of FAS? FAS. It's a ETF. Let me see. Never heard of this one before. FAS. Financials. Bullish ETF. And it's 3 times leveraged. Personally, I'm not a huge fan of finance stocks. So I wouldn't want to take that trade. I think that there's more risk in finance than there is potential reward. But, given that we've sold off so much for a lot of financial stocks, you might see the opposite way around. But I think that it's just a matter of time before something else ends up blowing up, another regional bank. Of course, they're going to get bailed out by the FDIC and the insurance, but the stock itself doesn't end up getting bailed out. The equity holders, the bond holders, it's only the depositors that get bailed out. So that is problematic for the bank stocks, not so much for the people that are depositing into the banks. Sell to close is when you wheel a stock and you receive a credit. You would buy to close if you're running the wheel strategy, since you sell to open. 315 put for Qs next week. What's it? It's already trading at 315 right now. So you're buying it at the money. For next week's expiration, let's see. Let's see what we have going on next week. Let me check the economic calendar. The markets haven't really been, sorry about that. Markets haven't really been reacting to economic data that's been coming out. It doesn't seem like recently. At least not in the usual way that it would. It seems to be caring more about what like Secretary Yellen is saying, or what the Fed members are saying during these testimonies, rather, than what we're seeing for the data. Interesting note there. But next week we have manufacturing PMI. Nothing big on Monday. JOLTS job openings on Tuesday. That could end up shaking the markets to the downside. There on April 4th. You have ADP non-farm employment change. Services PMI on Wednesday. Those are 2 big events. So if I were to set an expiration date for next week, I would probably want to set it for Wednesday, just because that's when all the volatility is going to be. And let's see, on Friday, you have non-farm payrolls, unemployment rate. Curious to see if the unemployment rate will tick higher again. Last time it was 3.6, and it did end up going up from 3.4 the month before. So think if that ticks up, then you'll get the re-spark of the recession fears. Yeah, core PCEs tomorrow, and the important, the Fed's favorite inflation measure. Do I play channels? No, I do not. Sometimes we'll watch like what's called testimonies and stuff like that, but there's nothing going on today, I don't think. But yeah, SPY's trading at 403.84. The Dow is a laggard today. Only up 0.45%. So you're not seeing much love for the staples, industrials, as you are for the small caps are leading the way. Now IWM is up 0.9%. Coming up to that high again at 177.12. It might make a new daily high here. And if we see some upside, we're probably going to see the upside for the rest of the market. Again, this is your risk on indicator. Let's see, IWM trading at 177 right now. I wonder how much it costs to get in on a 177, 178 call debit spread for IWM. You'd have to set the expiration date to tomorrow because they don't have daily expirations. But if we're assuming it's going to 178 tomorrow, we're paying 50 cents. It's kind of expensive. But since the expiration date is tomorrow, you do have more time for it to trade up. If you get one strike price higher, you're reducing your cost to 34 cents instead of 50. But that would mean that you would need to break that 177 resistance. And 179 would be probably the next resistance right around here. The highs from March 14th. All right. They're going for 35 cents a piece. SPY's coming back to 404. Almost tempted to make the trade on QQQ instead, since that one is behind. Usually whenever one is ahead, one is behind, it'll kind of invert the next day. So QQQ could be the better trade to take the bullish side on. Because this one is behind right now, and I think QQQ also has the daily expirations, yeah. So with QQQ, it hasn't been to these levels before, so that makes this trade a little bit harder to judge. $3.15, $3.16 call debit spread is 48 cents. Too expensive for my taste. One strike price higher, 3.16, 3.17. It's going for 28. And now it looks like we're getting the pullback for IWM. So maybe we can get that cheaper. All right. Maybe we can get a pullback down to like 314.50 or so. We can get this cheaper, but I don't think I'm willing to pay 49 cents at the ask right now. So we'll keep this open and wait for it to get cheap. Oh, any channels like patterns in the chart? No. I just use price levels personally. And then Fibonacci's for price levels also. Bought TQQQ. Not too bad. The VIX is surprisingly going up right now. 1911 versus 19 to start with. And you're not really seeing much movement for SPY this morning. I mean, we're just kind of trading flat for right now. But VIX is actually making its move. Interesting enough. All right. Now these call debit spreads are looking a lot better. They're trading for 42 cents instead of the 49 cents that they were going for earlier. We're slipping below 50 on the RSI, so that's not promising. If we extend the expiration date for tomorrow, same strike prices. We pay that extra 7 cents. Interesting to see that the VIX and SPY are up at the same time. That usually doesn't happen, and when it does, sometimes it can be an indicator of a pretty substantial drop to come. I've already got my bearish trades open, so don't really need to open anymore. Just trying to look for some bullish action right now. Yeah, it looks like getting those call debit spreads was probably our best move. I'm going to try to get them at like 45 or so. Now they're going for 48, so they're too expensive. All right. Place the order. We'll see if it goes through. Doesn't look like it yet. What do I think of China and other countries trying to get rid of the dollar? So that's going to devalue the dollar since we are the global reserve. And if we lose our global reserve status, that will lead to higher inflation here in the U.S. because the dollar has less value to it than it did whenever it was the petrodollar. So that means, poor living standards here in the U.S. You're paying more for less goods. So it is inflationary, which would be bad for the markets because rates would have to go up more in order to fight off that inflation. Do I think golden and death cross are good indicators? A lot of people use moving averages, so I would say yes to some degree. If people are using the 50 and the 200 moving average, which are very common, then that would have more significance. So yes, but that can easily just switch around to the other side, especially in today's market where we're just so volatile. Strange considering the pre-market is so bullish. Yeah, that's kind of what we've been seeing is a lot of pre-market after hour action and then dead flat during the day. So we don't get to take advantage of any intraday moves. Yeah, I would say that's probably true. Larger time frames are more significant for moving averages, and then you can use them on like hourly charts, but less people are looking at hourly charts than people are looking at, say, daily charts. But yeah, IWM is up almost 1% now. Those call debit spreads are going for 52, so I wasn't able to snag them at 45. Might just have to go one strike price higher. And that's going for 36 now. That's almost 40 cents. So yeah, the markets are definitely betting on the upside right now. And even the VIX is up right now, 0.2%, with the rest of the market up. So that's what's really getting me, is the VIX being up, converging with SPY. Unusual, to say the least. Alright. So now I'm looking at the 316, 317 call debit spread for QQQ instead of the previous 315, 316. Going one strike price higher. I'm going to open less of these, though, just because it is less likely to work out on me. Oh, geez. They're going for 42 now. That's crazy. I don't want to chase them up, but let's see. They're going for 42 at the ask, 40 at the bid. Damn. Yeah, we're trading at 316 already, so makes sense for them to be trading at 40, but I missed out on that. Let's see. I'll purchase them at 40, but nothing more than that. There we go. So that will be a day trade. Just opened a new QQQ call debit spread expiring today. Today is the 30th at 40. Uh, 316, 317. Now IWM is taking the lead, or QQQ is taking the lead. Interesting enough, those ended up flipping. And SPY's at 404.10. Any thoughts for SoFi? Not a huge fan for SoFi. I think that it's pretty pricey stock given that they have negative earnings per share. I wouldn't want to, be purchasing that, especially I think a lot of their debt is in student loans. And with the, student loans being on the verge of forgiveness or not, it's kind of up in the air. So for SoFi, I wouldn't want to trade it for long term or hold it for the long term. Let's look at the analysis tab. Analyze. Fundamentals. SoFi. The earnings per share has been negative 40 cents over the past year. So losing a pretty good chunk of money. Let's see what their cash. I wish they had cash flow statements on here. That would be really nice. But we can go to SoFi Investor Relations. Q2 earnings, press release, the 10K is what you want. Not seeing the cash flow statement. Let's see. There we go. Consolidated cash flow statement. So they use $7.2 billion in operating activities. Their net loss was $320 million, and a lot of that came from changes in loans held for sale. Net cash used in investing activities was $106 million. Yeah, this is in thousands. And then, let's see. Cash and cash equivalents at the beginning and end of the period, I'm guessing this is beginning and end of 2022, was $768 million, or 7 to 1.8 billion. So they actually added to their cash pile. But it seems like this came from financing activities, where they got $8.3 billion. Most of that ended up being net change in deposits, so people depositing. But I wonder if that would be sustainable. I'm not too sure. They don't have any previous reports of net change in deposits, but that's where a lot of it came from. And then net change in debt facilities was added $1.4 billion. So, I mean, just with the operating activities burning, what, $7.2 billion? That would be my main concern. And then the changes in loans was a large part of that. Their net loss wasn't too bad at $320 million. But, if they're losing $320 million a year, that means they have about 6 years. So they have a lot of runway, given that. But I do think that they're kind of up in the air with the whole issue with student loan forgiveness. Trading-wise, it's trading at 581 right now. You're going to have some resistance at 636 from this gap up. And then another resistance at 610. And below for supports, let's see, you're going to have, looks like 525 is where it caught a bid last time and ended up going up, and then like 480 or so. Right now it's at 47 on the RSI, so it's looking negative at the moment. MACD is also negative, but starting to turn up, so you could get a little bit of bullish price action, but I wouldn't really expect it to go maybe above like 610. It is up 0.78% today, whereas QQQ is up 0.7% right now. So that one ended up pulling back. All right, I might have to close out of that call debit spread. Looking like we might slip below 50 on the RSI. That's what I'll be looking for. The VIX is coming back up though. 1933 up 1.1%. That is leading the way. SPY is back down to 403.40, so that one's making a new morning low. What do I think today is going to be? Up or down? My guess would be the downside, but I do have the hedge for QQQ going up, just in case. Key support levels for BAPA. Let's see. We're at 103.45 right now. Looking at the daily chart. These are old. Let's see. You got supports at 97.22. You got another support roughly at, let's see, the open was 105 for this candle, close was 98. So that's a $7 difference. So 101.50 would be your first support. Next support would be like 97.50. Let me draw it on the chart. There's also some support around 97.30 or 93.20, sorry. But the low for this candle was 96.66. And then 92.35 below that from this gap up. Low on this candle was 92.06. So those are your few support levels to look out for. Yep, no problem. SPY slipping down to 403.30. Looks like we're below 50 RSI, so I'm ahead out of this call debit spread. 0.23 is what I'm looking at. Ooh. All right, got out of that. Closing options alert. Premium. Just cut losses for the QQQ call debit spread expiring today. 330 at 23 each. originally opened those at 40, 8 of them. So let's see. Originally opened 8 at 40. So 320 minus 184. 136 on the loss. Alright. And then SPY's pulling back to 403, so that called credit spread that we opened ought to be doing okay. And the VIX is up a measly 1% today. So hopefully we can get some love out of that. Let's see. The call credit spread, these are up 77, no, 42. But SPY's headed lower. Hopefully we come down to fill the gap to 401 just because we've had 2 gap ups. It seems unsustainable. Let's see what we got going on for the news cycle this morning. Russian Foreign Ministry spokeswoman says U.S. reporter was engaged in something completely different under guise of a journalist. We got U.S. people spying in Russia, apparently. U.S. GDP slows in Q4. Markets heat up with the jobless claims going higher. Let's see what else we got. TikTok enlists 3 prominent advisors in the fight against the U.S. app ban. Dow Jones Industrial hits the highest intraday level since March 9th. S&P hits highest intraday level since March 6th. WCC developed double bottom pattern. Bed Bath & Beyond files for a stock offering. Ooh. Oh, they're down 7% after that. Jesus Christ. Yeah, 6.8% after doing a stock offering. They're trying to come up with money, and they're already such a dirt cheap stock. That's not a good look. They're trading for 75 cents. Like, it's literally a penny stock. That's crazy. And they're trying to come up with money. That's just sad. They got themselves in a sticky situation. Yeah. Learned a lot with options trading, and I've been trading stocks for 8 years. I've been trading since 2016, so about 6 years, and then options I started trading in 2020, so 3 years or so. So I know a little bit, a thing or two about them. Let's see, SPY's at 403 though. So the VIX is finally catching a little bit of love. 1940 right now. Like I was saying, whenever you see a convergence of VIX and SPY, that can lead to some pretty big moves to the downside. Basically, what that means whenever those two are converging is that you're getting volatility to the upside, right? And volatility works in both directions. It works both up and down. So, you're seeing these 1% day after 1% day after 1% day. Eventually it's going to get to be just too much because the markets can't just work in a straight line, right? At some point you have to pull back. So given the double gap up that we've seen the last couple of days, my guess is that we'll see a pullback in the next week or so. I've got the call credit spread expiring tomorrow, assuming that we won't go above 405. And then I also opened another one, a put debit spread expiring for next Wednesday. So I gave this one a week. And I'm assuming that we're going to fill the first gap that we created down to, let's see, 396, which is like $6 away. So it is a little bit less likely just because of how far it is away. But given the extra time, I think that could play out. The banking system is sound and resilient. So is SPY. SPY above 400 is sound and resilient. Don't worry about it. Let's see what SPX is up to. SPX is at 4072. I've heard a lot of talks about the JP Morgan collar at 4065, so you might have SPY closing around 4065 in the next couple of days. So you might see some up and down volatility, maybe down to 4050, rebound to 4065 or something like that. Wouldn't be too shocking. But yeah, everything's kind of pulling back right now. Hopefully we fill that gap, just because, I mean, the more that we gap up like this, the more unhealthy the market is getting. But yeah, definitely glad I got out of that QQQ call debit spread. We're definitely below 50 RSI, so starting to look bearish for the Qs right now. And SPY's at 402.90. I'll run the poll, see what y'all think. Start poll. How will the market close today? Green or red? What do y'all think? Do you think this is excessive zero DTEs that are moving up prices? That could be. I mean, the markets work on a few things. They work on data, all these economic news that's coming out every day. They work on narrative. So are we in a recession, or are we feeling inflationary? And then you have, the mechanics of the market. So people buying calls, buying puts, and the market makers having to hedge those positions. So if you have a lot of people that are just piling into calls day after day after day, then yeah, you're going to get a lot of buying pressure, because the market makers that are selling those calls, have to hedge their positions. So since they're selling a call, they have to sell 100 shares. So once that call becomes in the money, they have to buy 100 shares, which just kind of perpetually pushes it up. That's what you know as a gamma squeeze, essentially. So whenever everybody is buying up calls, you get a gamma squeeze to the upside. And then that also works to the downside. If everybody is starting to buy puts, then you're going to keep selling off. Do quarterly expirations affect the market? Yes. Quarterly and monthly expiration dates have a greater impact on the market than what you'll see for weekly expirations. But this isn't the quarterly expiration date. The quarterly expiration date would have been March 2 weeks ago. I think the 19th, but I'm not let's see. Let's pull up the calendar. It's on the third Friday, not the last Friday of the month. So the third Friday of the month was March 17th. So that would have been your quarterly expiration date, not tomorrow, the 31st. And those do have more weight to them than you would see for weekly expirations. There will be more push to reach the maximum pain point, or the highest point of open interest, than what you would see for a weekly expiration, just because there's more options open, more open interest. So there's more damage done if the market makers can push to that highest open interest strike price. What is the definition of a gap up? Whenever the markets go from 401.30 to 382. So in the after hours in the pre-market, you are at a higher price than you were at close yesterday. So you'll see this on the daily chart specifically, right? You see these gaps between the high of March 28th and the low of March 29th, right? You have a $3 gap there. And then you have another gap between the high of 329 and today's low, currently at 402.93. So you have a double gap up the last couple of days. So whenever you see gaps in the daily chart, that would be a gap up. Or if it's a gap down, then you would see the opposite way around. So that would be something like February 16th to February 17th, where the low was, let's see, 408.14 to a high the next day of 407.51. IWM is the one that's crashing right now. Only up 0.5% now. So if that one ends up filling the gap, then I think the rest of the market would kind of follow along. Again, IWM is like the risk on, risk off indicator. It's the Russell 2000. So small cap companies are usually the worst hit whenever you get into a recession, just because they have less capital to tap into with equity, because they have a smaller amount of equity. So if this one ends up coming down to 175.50, back to yesterday's close, I think the rest of the market would follow along and fill that gap in. But we're still trading at 176.30, so you got a ways to hit 175.50. It's another 80 cents, or about 0.5%. Looks like Q's might be going back to the highs. We'll see if it ends up cracking that or not. NASDAQ 100 officially enters a bull market. History suggests returns will be at least double digits from here. Let's see what the history says on it. It's climbed more than 20% from its October lows to date, breaking the bear market that began in February of 2022. This is a percent change by month, I'm guessing. Nvidia's up 85%. Yeah, because that's sustainable. $273 for Nvidia right now. That is insane. Almost reaching the new highs. Let's see, Micron is trading for 63. So this one's actually pulling back. Micron is actually pulling back right now, even with Nvidia going up. That's a little bit shocking. I got a put debit spread expiring in May for this one. Assuming that it'll come back down to 55, this gives me a little bit more confidence in that. Since Nvidia is heading up and Micron is still pulling back. So once Nvidia does see that pullback, Micron would sell off a bit more. Yeah. Q's broke the high probably. 315.90 now. So yeah, it just ended up reversing that down move right there. Went below 50 RSI for a hot minute and then popped right back off of that. What are the major catalysts between today and next FOMC? Next FOMC is until, I think, May. So you have a lot of events until then. Economic calendar. Let's see. The next FOMC is mid-May, I think. May 3rd, actually. So the beginning of May. So between now and May 3rd, let's see. This calendar function hasn't been working the last week. Let me try to do this on Chrome instead of Safari. See if that fixes it, if it's a pop-up or something like that. All right, there we go. Now it's working, and then you go to May 3rd. So between now and then, let's filter for US data. And let's filter for second and third tier volatility. All right, so Tuesday the 28th, that was already passed. Today's the 30th. Starting with today, you have the GDP coming in. You got Treasury Secretary Yellen speaking. You're going to get an update for the Fed balance sheet today. So we'll see if they added more to their balance sheet, probably. And then you have March 31st. Tomorrow you have PCE, so inflation is coming out tomorrow. You got the Michigan Economic Report. Manufacturing PMI is coming out next Monday, and then the JOLTS job openings Tuesday. Wednesday you have the non-farm employment change. That's a pretty big one. And then I think on Friday you have the unemployment rate, so that's a big event. You have CPI Wednesday, April 12th. So more inflation reports. PPI, the producer price index, on the 13th on Thursday. Retail sales on the 14th on Friday. And then the next couple weeks after that, you don't have much. You have the Philly Fed manufacturing report. And that's about it. So that's all the major events between now and the next FOMC on May 3rd. I wonder how an iron condor for today could end up playing out. For Qs, it's looking more bullish than it is neutral, but that 316 level, it's kind of hesitating at right now. Let's see. It's at 316.02. IWM is up 0.7%, and then SPY is up 0.7% with that. So SPY actually might hit the new high. But yeah, Qs is definitely definitely headed up right now. 316.20. So that actually might end up hitting the 317 mark that I was looking for. Zim. Let's see, ZIM. Shipping services. It's up 2.7%. The volume on it seems pretty low. So that's probably why you're getting a lot of action. Yeah, you got 1 million volume so far this morning. So that's pretty low for the first hour. But let's see what the usual volume is, like 3.5 million, 5 million. Highest volume was 18 million. So given that it's not traded as much, you're probably going to see some fluctuations in the bid-ask price, which could end up in a skew of how much the options are up or down. So it looks like Q's is pulling back from that 316 level now. 315.77. So let's watch for 50 RSI. If it cracks below that again, I think it'll sell off. But right now it's at 62, so it's pretty solidly above. You might just see a lot of volatility like you did right here. And if you get a sell-off from here, the VIX could really end up moving up. It's already up 1.4%, but if you get another move down after that kind of fake out that we had for QQQ, the VIX might actually make its way back up to 20. Maybe it'll be up like 3% today or something like that. But you would need that flush down. Charles Schwab is going down right now. Let's see. Schwab. Down 3.5% today. That's actually pretty substantial. Morgan Stanley downgraded Schwab to equal weight from overweight, cut their price target to 68. That's still way above where it's trading right now at 53, so not sure why they would downgrade that to equal weight unless they expect the markets to perform really well. Let's see, 53, 68. They're expecting it to go up 22%, so they're expecting the markets to go up 22% in the next year. I think that's a bit ridiculous. Maybe they didn't want to give a bearish price target for some reason, though. And then Morgan Stanley stock is up 0.1%. What is it looking like on the yearly? This is almost at the lows, but not quite as low as you were seeing in the height of this mess. Let's see, it went all the way down to 44, and now it's catching some supports at around 52. So you might end up rallying off of this, depending on if there's any more bank fears coming up in the market. %52 green today. How many votes do we have? 25 votes and 52% are saying green day. What are the big names doing today? The large caps. Apple's at 162. Jesus Christ, I can't believe Apple's at 160. Microsoft is at 282. Tesla is at 196. Jesus Christ. It keeps getting close to that 200 market every time. It just sells off right after. And let's see, finally, Nvidia is at 273, 274 almost. So all the big caps, the large mega cap companies are doing really well today. And that's what makes up a majority of the NASDAQ. I think it's like something along the lines of like 50%. And then for, I think, SPY, it's like 15% or something like that. But because these, mega cap companies have such large market caps whenever they're going up like they have been, that just really sends the rest of the market up with it. Oil is doing the best this morning now at 1.2%. 73.80 a barrel. Oh. But yeah, we're getting a pretty boring morning so far. But it does look like it's going up right now. For Qs, for IWM, kind of looks the opposite way. And then for SPY, it looks negative. So kind of conflicting what we're seeing for SPY and IWM versus QQQ. So it might just be a mixed market today, or we end up trading flat would be my guess. Probably not going to hit the 405 level. Probably not going to dip below like the 401 level would be my guess for SPY. So I could do a iron condor with that. The 401 400 is only paying 5 cents. But the call side is paying 20 cents. So you get paid total of 27. Let's see. Seems like a low credit for an iron condor. Only assuming SPY will trade flat. Right now it's at 404 and I'm taking 405 for the upside. Ideally, you would want the stock between the middle, between the strike prices that you short. So that would be 401 and 405. So you would want it at 403. Right now it's at 404 and still headed up right now with the RSI. And QQQ is just leading me to believe that it's going to be an upside day. So maybe our bottom is in at 403 for today. If we go with 402, we get paid 10 cents, really? The credits for puts are just terrible. And then the 403, you only get 21 cents. Yeah, none of these are really worth it right now. So I think I'll just sit out for this one. But my guess is probably a neutral day. Maybe trading around like 403.50 or something like that. If I got paid more, I would take on the 403 put credit spread. Or an iron condor, but 30 cents a credit for an iron condor doesn't seem like enough. But yeah, that's all the trades I'll make for today. I got the call credit spread expiring for tomorrow, assuming we're going to be below 405. And let's see. And that's about it. Meta's testing a new breakout level. Let's see. Meta. I forget about Meta sometimes. Yeah, it's at 207 right now, so almost at the yearly highs. 236 was the yearly highs, so that's pretty crazy what we're seeing for all the mega cap companies. They're all just catching the love right now. But yeah, I'll catch y'all tomorrow morning at 9:30. See you, everybody.